Hello everybody, Alex here with Momentum Charting. I want to give you a big thank you for taking the time out of your busy day to watch this video. And if you wouldn't mind, please, if you enjoy this content, go ahead and like, subscribe, and hit that bell notification. It lets the YouTube algorithm know that you enjoy this content and that you want to see more content like this from me. So, title of this video, obviously, question mark, stock market crash 2021. Now, let me just briefly and quickly say that, is the stock market going to crash in 2021? I do not know. But what I do know is that there isn't a day that goes by where I don't see 5, 10, 15 different videos talking about an imminent stock market crash. The market is on the verge of collapse. The dollar is going to zero. Bitcoin's going to 2 million. The dollar is crashing. The stock market's going to crash. There is not a single day that goes by that I don't see a bunch of videos out by different people that are saying the market is in big trouble. It's overextended. And guys, they've been saying this for the entirety of this year and earlier. In fact, there are so many people that have been panicked since the COVID crash of 2020 that a lot of people have missed out on the entirety of these gains, since April, May 2020. Missed this entire move because they are scared of a stock market crash and all the fear and uncertainty that they hear in the news and YouTube and other news outlets about an imminent stock market crash. Now, the fact is, yes, I do not know if there's going to be a market crash in 2021. I don't know. I do not have a crystal ball. But what I can provide to you is a couple of tools here that you can use on your own to see when the potential of a stock market crash actually exists. Okay? And that's what I'm going to share with you today. It's not going to take us long. The first chart I want to show you is the SPY. Right now, what you want to do is go into TradingView or whatever charting software you use, put the time frame on 1 day, and you can extend out, and you just want to connect a couple of points here. One is going to be the March 2009 lows, which are going to be right here. Take your trend line, draw it here. March 2009. October 3rd, 2011. January 20th, 2016. And then just run that trend line all the way up diagonally, connecting those three key lows in the market that we've had since 2009. That's what I call our long-term support line, our main long-term uptrend line. Okay? And now what we've got in place here is what I refer to as a medium or intermittent term trend line, which we are in a strong move to the upside. So we've got a strong long-term trend line, and we are in the midst of a strong intermediate-term trend line. Don't let anybody fool you guys by saying the stock market crash is right around the corner. It's ready to crash, this and that. It's it's a fool's errand to try to pick an exact market top and bottom. But what I'm going to do here is show you that as we remain above this lower band of this channel, there is an approximately 0% chance of a stock market crash. Now, that doesn't mean we can't have a correction, right? 7 to 10%, but we call that a market correction, okay? We don't call that a stock market crash. I think a crash is defined as 18% or more, or something like that. And obviously, the COVID crash was over 30%. So, yes, we can certainly have corrections here at any time, but there is an an exactly 0% chance of a stock market crash, a full-on crash like we witnessed in February 2020 of the COVID panic, until we at a minimum break this bottom channel trend line. It's just not going to happen. Right now, we have not even visited the below the center line of this channel since November 2020. We are in an extremely strong uptrend still right now, guys. Again, don't be fooled. Do this yourself. Take this trend line, take the point, lowest point of the candle on this date here, April 21st, 2020. Hit this candle here, May 14th, 2020, and hit this candle right here, 30th of October, 2020. Line those three market bottoms up, create the lowest trend line, and then if you want to create these other two, you can do that, but this is the most important one. If you want to do that, you can just right click and you can clone this trend line, but again, not necessary. But this is the main thing you want to watch, is any break of this lower trend line here. And until that happens, guys, the markets just simply are not going to crash. We're not in panic mode. We're not in scare mode. We're not in exit the market mode. We need to see a set of daily candles below this trend line for there to be any risk at all in the markets of a crash. Now, just because it comes down here doesn't mean that the markets are going to immediately crash, right? That is not at all what I'm saying. All that I'm saying is that if we happen to break outside of this trend line on the S&P, there exists a significantly higher chance of an actual market crash than there does now. Okay? Now, sometimes what happens once these channels break, you go sideways for months. Sometimes you retest the lower part of this channel and then crash. Sometimes once you break out of these channels, you come straight down. It just depends. But right now, inside of this channel, inside of this, above this lower trend line, there is no chance of a large market crash. It's not going to happen. And I want to show you one more chart that illustrates this. Again, I showed you those points. Take that on your S&P. You have the tools now to understand exactly if and when there is a high chance of a market crash, and that is not right now. That's not going to happen until we are outside of this lower trend line. Now, size of the correction. Once the markets break down, they have a tendency to revisit the main long-term trend line. You can see that happened in 2018. That happened obviously in the COVID lows, and that's happened a few different times since 2009. We revisited this trend line, so it makes a lot of sense to me that we would be targeting areas, depending on when this happened, around here, around this main trend line, which would be we've had such a move to the upside. This would be a monstrous move to the downside if we were to come all the way down here. But again, that's just not in the cards right now, and you just want to pay attention and watch for this. Watch until we're outside of this lower trend line. And that would represent, let's see, if for instance, if we broke down, let's say here, that would represent something like another 33% market correction, which would put us almost equal to what happened in the COVID crash of 2020. So could happen, and it's just not something that's showing in the markets right now. So that is chart number one that I wanted to show you, and chart number two. Also, we're going to stick with the daily time frame, and we are going to go to the IWM, which is the Russell 2000, which has a tendency to act a little bit like a canary in the coal mine for overall markets. It sometimes breaks down earlier than the SPY and the QQQ and general markets. It started breaking down here earlier than February 24th, 2020, and kind of just gave us an early indication that markets were not healthy back here in 2020. So what I want to do here, again, go to the IWM daily chart, take your trend line, mark this first point, January 27th, 2021. Next, March 5th, 2021. Next, right here, May 12th, 2021. Draw this trend line here. Do yourself a favor, do it right now. You can take or leave this trend line here, but the important part is that our long-term trend line exists right here. Again, all I did was go from the March 2009 lows, hitting a couple of key points along the way in the IWM. Let's see, we tagged this here in January 2016, tagged again nicely in the December 19th, 2019 crash, and you can see this went way below our main trend line in the COVID crash, but quickly came all the way back up to this main trend line and then started back up again in earnest. And in order for there to be any sort of crash in the market, this is a sort of a much more interesting to me setup than we had on the SPY, because it's sort of the way this is setting up in this sort of triangle pattern sort of gives a timeline of when the strongest possibility of a crash could be, which seems to be the end of this triangle sometime in February, late February of 2022. But in order for there to be any risk of a market crash, again, we are going to need to see price on daily candles start dropping below this extremely significant support trend line. Otherwise, there just is no market risk of a crash. It's not going to happen. Guys, I don't know if the crash is coming soon, if it's coming next month, if it's coming at the end of the year, if it's coming next year. Yes, at some point it's going to happen. I agree with everybody else. Markets are significantly extended right now. But as we remain inside these channels, triangle here on IWM and inside that channel on the SPY, there just is no risk of a significant market crash. It's just not going to happen. If the markets continue up the rest of the year, don't miss out on it. Don't just stay out of the markets because you're seeing all these videos saying the market there's an imminent crash around the corner. A lot of people missed out on a lot of gains because of a lot of fear and uncertainty, but you can take for yourself now. You have the tools to assess the markets, right? You can draw out both these trend lines on the SPY and IWM, and you can see for yourself without turning to video content that's going to tell you the crash is a week away. You can see here for yourself what's happening in the markets. We need a break outside one or both, eventually both, of these significant trend lines in order for there to be a large market crash. And guys, that is the end of this video. Again, I hope you found it useful. Just a little something for you to draw on your own charts and know in the back of your mind, unless you see significant price action in candles outside of this trend line here and outside of the channel on SPY, the markets aren't crashing. It's as simple as that. Correction territory on this, the IWN, the long-term trend line right now sits at around 158, so that would be a reasonable area to expect if markets were to break down. Sizable correction, but again, the expectation of a crash in the market exists only outside of the bounds of this upward sloping trend line. And that's it for now, guys. Hope you have a nice day, and I will see you again in the next video. Bye for now.